Welcome to the Crypto and Blockchain Talk.
Hello. Hey. Guten Tag.
Aloha.
Hola.
Shalom. Hallo.
Namaste.
Ni hao.
Privet.
Hello.
Salut.
Yassas.
Salve.
Ciao.
Bonjour.
Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain.
Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. And this is going to be part 2 of the Volatility series. And this one is going to be called Hold On to Your Underpants. I don't know. We'll come up with a name in a moment because I have none other than the one and only Rob Levy of Hero, HXRO, here with me this week on this lovely podcast. So Rob, welcome to this week's Crypto and Blockchain Talk.
Oh, thanks for having me. Great to be back.
I gotta tell you, I have missed you. And every time I felt the marketplace kind of, like you're in an elevator and you're trying to go up and you feel it dropping underneath you. And I thought to myself, if I could be locked in this elevator with one person, it would be Rob. I'd love to hear his comments. And here you are with us. So in the first instance, even though Bitcoin is not as high as it was, let's say, a month ago, it's dropped. It's kind of gone up a little bit because it really did go all the way down. I think I saw it hit, am I right to say 30 on some exchanges? Do you know what the lowest it's been on any exchanges? Yep. What was the lowest?
I think the low print on Coinbase itself was 30,000 on the head.
Oh.
I think there was a pretty big bid there. 30,000 was the low print. And on I think Binance might have been the low. Binance showing 30,000 too. But I do know there was sub 30,000 prints somewhere, close to 29,000 and change. So it was, wow, that was something else. So crazy action, crazy move. And there was real fear. I mean, it was palpable. There was real fear in the market.
It was real. It was real. And it's still real because it's not really stabilized. It's not like it's a significant stabilizing at this moment. You still see a lot of movement. It's very volatile, extremely volatile at this moment. Every second it's going up by thousands and down by thousands. At least that's what it seems like to me. But before we get into like the nitty gritty of all that stuff, I want to cover some significant news pieces. And I've been holding on to these, by the way, until I got you on. The first thing I wanted to talk to you about was about China banning financial institutions from offering their crypto services. Now, many people have said that this is a significant reason for this drop, for the major instability. And of course, if you have someone like China banning financial institutions and payment companies from providing services that are related to crypto transactions, that on a world stage, it could be a significant reason for all of this. Now, according to this ban from China, institutions, including, by the way, banks, online payment channels, etc., anyone who's in the fintech arena in China, can't offer clients any services at all involving crypto. And, this includes, of course, and I know I'm not trying to insult anyone's intelligence, but this includes trading, clearing, settlement. And this is something which it's very notable. And I think especially when you now have in the United States, no significant movements have been made yet with Gary Gensler, who's just stepping into the arena. But I just wonder what he's going to be thinking, watching what China's doing, which of course, it's a much more significant move to the right, I would say, than even India, who already put their flag in the sand. But what's also interesting is that even though they've banned crypto exchanges and ICOs, which they've done that for a long time. Like I said before on podcasts, I was there on the day in 2017 when China actually came out and said ICOs are illegal, and if any of you set foot in that big arena space that you rented to have this big conference, you'll probably be arrested. They haven't barred individuals from holding cryptocurrencies. So this is really just about institutional players not providing, these savings, trust, or any kind of crypto services or issuing financial products related to crypto. So I guess what I want to do is ask you, first of all, do you think that this is down to China's play in the marketplace, or do you think it's not this?
I think China has made statements about crypto, like you said, for years now, right? Going back to 2017. From everything that I've read and heard, this new announcement was a lot of recycled and reiteration of what was previously, quote unquote, banned. Now, they did add a couple new things with financial institutions. These services have been, quote unquote, banned in China for 4 years now, right? Almost 4 years, because I think it was like September of 2017 that really rocked the market. They're still not saying that Chinese citizens cannot own cryptocurrencies. They are saying that these financial institutions cannot do anything, offer any services related to crypto. And I don't think the headline itself was that groundbreaking personally, but I do think that when you're in a market that we had run so hard, so fast, and already the technical situation on the chart was we weren't at our strongest point. It did appear that the momentum had absolutely slowed, and the market didn't feel as strong as it was during that run up to the all-time high near 65,000. So it didn't take much to get this thing to roll over. And then a lot of technical selling occurred. And is it surprising about China? I don't think so. I mean, they're really starting to roll out. They've been testing their central bank digital currency, CBDC. You're going to be reading a lot more about those lately. Their digital yuan, they've been testing. They're going to roll that out. The bottom line with China is they've got issues with capital controls. They don't want their people taking money out of China and sending it elsewhere. And anything that they cannot directly control, it poses an issue for them. So they know that they can directly control movement of their CBDC, right? Their central bank digital currency. They really want all of their people to be monitored much more closely. And crypto, for what it represents, it allows for a little more leniency for people who can get smart and figure out how to move money outside of China. And the news itself, if you're on Twitter and you're on social media, everyone was like, oh, it's FUD, it's recycled headlines, and many of them were, but they added a couple extra things here that made it more strict on the financial institutions there in China. And China's all about digital payments anyway. I think Alipay, right, Alibaba, they do trillions of dollars of transactions through that. So it's not worrisome to them. But when it comes to Bitcoin and it comes to other cryptos, they do not want money leaving. They don't want their people to have that sort of freedom, unfortunately. And so this was kind of a reiteration of that. And then you couple that with there was a lot of mining announcements that got misinterpreted, or it was fuel to the fire, and that caused another dump in the market. So China was definitely one of the drivers of this price swoon. I would say probably the main driver. But the market itself, it had lost momentum. So then when the technicals take over, there was downside. And the downside, it came quick and sharp, quite painful.
Yeah, I absolutely feel you there. And just alluding back to what you were saying, the other side of the coin to what China was doing is that crypto miners, who account for like 70% of the global crypto supply, they halted all or part of their China operations. And this was after Beijing intensified this crackdown on Bitcoin mining and trading. And of course, that's a big deal when you have these huge mining farms like Hashcow and BTC Top they're two of the main players, and those guys have now halted or just totally dismantled their operations. And that is a huge, huge deal. This is the other side, like I said, of the coin, because their state council committee in China, and this is the first time, by the way, China's cabinet targeted digital currency mining, basically said that they have to do something about what's going on in the crypto space, and said that they need to stop what they're doing because it consumes too much energy, which of course they claim runs counter to their new carbon neutrality goals. Last time I was in China, it was literally like pea soup. I mean, it's been like that in China for a long time. So I guess they are trying to do something about the really bad smog and effects of environmental pollution. But I think this crackdown is an obvious part of their curb to end speculative crypto trading. Now, it's actually quite interesting because also an article that I happened to notice going to HSBC, which is the British bank, the HSBC said that they have no plans to launch a crypto trading desk or even offer any kind of cryptocurrency. And this is Europe's largest bank. Okay, so they are making the statement that they are not interested in crypto. So we know that China is saying this. Now, Europe's largest bank is saying no to crypto. So these are two statements coming out, and a lot of people who are new to the whole cryptosphere, they're looking at this, perhaps measuring it in their own mind with do they or don't they. And then I'm going to mention at the same time your BFF, Elon Musk. We're going to go there in a moment, and I know how much, I mean, no doubt you're staring at his poster on your wall there, Rob. But it is obviously a marked difference, though, against people like Goldman Sachs, who restarted their crypto trading desk. And I've seen reports, they're coming out one after the other. MicroStrategy is buying a hell of a lot more Bitcoin, apparently. But it looks like there are a lot of other companies who were already vested in this space who are looking at this as an opportunity to put an even bigger footprint into it. So,
Absolutely.
So, okay, let me go back to your BFF just for a moment, and let's just talk about his entry and then his comments and the timeliness of it and the possibility that he may or may not have something also to do with this insane volatility, especially as we know, and as I also talked about a little on my last podcast, he was so strong and so bullish on Bitcoin. The next thing you know, he's like, yeah, we're actually not going to be taking that crypto stuff anymore to buy our cars. So what is your current mind frame surrounding his tweets and everything else I just mentioned?
He actually just tweeted again today, and it caused a spike in the market. Elon Musk is, I don't know if he fully understands the importance of what he writes, what he tweets, what he says. But right now, every high-powered algorithm from, the biggest and best of the high-frequency traders, they're tracking his tweets. And if he makes a tweet that the machine thinks is positive for Bitcoin, they go out and start buying it aggressively. And if he tweets something that's negative, these algos go out and sell it aggressively. They don't think twice. It's just, that's what they do. They go get in the market. That is a big part of trading these days. These extremely powerful scrapers and algorithms that they're programmed to, if someone influential does something, says something, tweets something, it hits the news wires, whatever it is, they fire orders into the market aggressively. 100% that's happening right now with Elon Musk because he is the one guy who is influencing the crypto market the most right now. And that's in Bitcoin, and that's in Dogecoin. He must know that he wields that power. I just don't think he really cares or thinks before he tweets. I mean, he must. He's such a smart guy, but there is some disconnect between, his level of influence and his actions. I don't know. I don't think he's doing any nefarious stuff. Like, I do not think he's sitting there and saying, all right, I'm going to buy $1 million of Bitcoin here right before I make this tweet. I'm going to sell some Bitcoin here right before I make this tweet that might not come off great. I do not think he's doing that. I 100% do not think he's doing that. That would be
unconscionable.
That'd be illegal. I mean, Yeah, no,
It is illegal.
I do not think he's doing that.
This is why I really seriously love you, Rob. We have such great contrasting feelings on these issues. I think this guy's getting off on this because, look, first of all, his Bitcoin investment has fallen over $1 billion, right? Do you know what he did? He probably got a shed load of flack from everybody, from his board, from his own employees, and he went, oh crap, I better tweet that Bitcoin's the best thing ever and we're going to take it for every payment because I got to get this back up. I don't think he's such a nicey boy.
No.
You see, this is the thing, Rob. I really do believe nice guys finish last. And I don't think the reason why he's first isn't because he's a nice guy.
Let's talk about this $1 billion, though. Okay, let's say he bought $1.5 billion with the Tesla treasury. Mm-hmm. I mean, what was his average price, right? Like 37,000?
Wasn't it 32? I don't know. Let me have a look.
Yeah, maybe. No, it might have been less. But this $1 billion, that was all paper gains. I mean, he actually sold 10% of it, and they locked in $180 million or $170 million of realized gains, but he didn't lose $1 billion. He might have lost $1 billion from where it was marked when it was trading 64,000 or 60,000, but they're still in the black. They're up paper profits from their Bitcoin holdings. So he hasn't lost $1 billion. He might have gotten flack from the board and all that, but there's no way. They're not down money. They're down money on paper from where they were, but those were just paper gains. So he hasn't lost anything. I do think where he was getting flack and maybe it started to get overpowering not only from his shareholders, but from other people that he needs to get licenses for different business activities is this idea that, oh, okay, Elon, so talk to me about Bitcoin mining and how much fossil fuel electricity it uses. Aren't you the big steward of renewables and yada, yada, yada? And we're not going to give you this license or this deal or this whatever with the EPA or whoever else it is if you're going to take this stance and be supportive of Bitcoin without being vocal about its fossil fuel energy usage. I think that stuff was most likely going on, and that's what led him to make the statement about Bitcoin's energy usage. I think that's why he had to make the decision to stop accepting Bitcoin for his car sales. But bottom line, I don't think they sold any cars. If anything, I bet we can count it on two hands how many cars they sold with Bitcoin. That wasn't happening. You know, real Bitcoiners aren't paying for that stuff in Bitcoin. They're holding on to their Bitcoin. So that wasn't a big deal. It was more the optics of it, and you can tell that there was politics involved here. I don't think that there was any real nefarious stuff going on. That's my opinion. And, you know, today he just tweeted that he spoke with the North American Bitcoin miners. That was his tweet 46 minutes ago. And from there, we saw Bitcoin swiftly go up by, $500, $700. What it shows is, first off, it's incredible how much he's thinking about this stuff. I mean, that to me, it's another conversation, but he really is thinking about this stuff a lot.
He certainly is.
Yeah, the idea that he's speaking with the North American Bitcoin miners, he's talking about renewables, he's committed to more renewable usage, that's positive. The announcement about them not taking Bitcoin, that was perceived to be an extremely negative headline, and quite frankly, I don't think it was so negative, but people then assume that Tesla sold their Bitcoin, and he clarified that a few days later that, with another cryptic tweet saying Tesla has diamond hands, they didn't sell anything, aside from the 10% that they announced. So, I mean, we're talking about Twitter here, we're talking about social media. When you have to clarify statements and all that, this is it's a $1 trillion market at this point, just Bitcoin alone. There's a lot riding on this. So I think that he's a little too powerful for how he perceives himself. And it just I think he's got to be more careful about what he's putting out there. Yeah, it's just one last little thing. It's feeding right into the high frequency trading community, because the people who can scrape those headlines the quickest are the ones making money off this. And the ones who are losing are really retail.
I'm just so glad that you just said those last couple of sentences, because you're right. He should be more careful. But guess what? He's not. It's very interesting how still people are swaying to his every word, and it's easy to see. But it really did confuse me, though, his tweet. The one that said, to clarify speculation, and this is on May 17th of this year, 2021, at 8:56 a.m. And he said, to clarify speculation, Tesla has not sold any Bitcoin. Now, that sentence says any Bitcoin. And to me, in English, which I think is my first language, that means ever. Mm-hmm. Otherwise he would have said, we have not sold any Bitcoin since the 10% on such and such date. That makes it, that tweet says any Bitcoin. And it kind of, the way that it's written with the full stop, means at any time. When we know for sure that Tesla sold some of its Bitcoin in the first quarter of this year, and they made $272 million in proceeds. And this was put out there in the news by their CFO, Zach Kirkhorn, and he said this on an earnings call. So I'm just really confused by the way he models his tweets, by what he says. And what I'm worried about are the people. And when you have someone, money, if you're a billionaire, it's no big shakes. Money, when you're everyman and you are listening to these people because you revere them so much and you think, hey, this dude's a billionaire. He knows what he's doing. We got to follow what he says. A lot of people are going to be left hurt, really hurt. So that's the thing that worries me. He doesn't think. But Bitcoin is quite down. I don't know. We can guess as much as we want about where market activity is going to take us. But why do you think more people aren't buying Bitcoin? Because, when the housing market crashed, you had a lot of people who came in and they're better for it today. They went and they bought every piece of property they could get their hands on. They even pooled with people to buy property. And of course, that property, it spiked back up. And then, of course, it crashed again, but it's still higher than it was when the crash originally happened. So what do you think is going on in this space that there aren't even more people becoming bullish on Bitcoin?
I think tons of people are becoming bullish on Bitcoin. Bitcoin is $40,000, $39,000, right? Bitcoin has come a very, very, very long way. If you had asked us a year ago, can you imagine Bitcoin at $40,000? Be like, hell no, no way is it going to $40,000 in a year. You are literally hallucinating. Bitcoin has gained a tremendous amount of value in a fast time, right? That is serious accrual of network value. So the fact that we went up to 60,000 and people could be hurt and potentially hurt badly who bought it at 60,000 because now we're 40,000, that is sad. But that is also a market, right? And something that goes up from $10,000 to $40,000 in a year, one of the double-edged swords of assets that gain tremendous amount of value is that there's high volatility. It can't gain that much value without being volatile, right? It's a gift and a curse. So if you're going to buy into Bitcoin as the long-term store of value, right, in countries that are facing inflation and all these other things, this is part of the game. And I know it's not a game, but this is part of how the markets work, right? You cannot enjoy 5x gains without experiencing real volatility. And that is just, it's part of the program here. People who bought in at 45, 50, 55, 60, and now they're looking at 39,000. Yeah, it hurts. But the bottom line is when you're buying into something that makes these sorts of moves, you have to be prepared for these sort of volatile down moves. I mean, it's just, that's how prices work. That's the nature of the beast here. So one thing that would be great is if people had access to risk management, to options, right? People need to have the right tools to manage risk, because if you're just long something that has gone up 5 times in value, you have to be prepared for it to go down 50%. That means it's still up 2.5 times from where we started. You've got to be prepared for the downdrafts, right? These retests and down moves.
It makes total sense. And I really love what you said about it being a gift and a curse at the same time. Absolutely. And, there's inherent risk in everything. It doesn't matter what it is. It's still very new. And anything that's this new, I really do believe, is incredibly volatile. And you're going to have, I think, still a lot of people who aren't buying into this ethos of Bitcoin yet, because they still don't. A lot of people still, as we know, because we do a lot of surveys here, we're always finding out what's going on because we need the information so that we can make statistographs and things like this. But, a lot of people still don't understand what Bitcoin is. They really don't. And they're too, and this is, of course, why we make stuff like this and why we have great people like you come on and speak, because we have to explain so that people don't make bad decisions. And if they do make a decision, at least they're as informed as possible. Of course, then they see the volatility of this market, and not only do they experience, like you said, fear, but they believe a lot of stuff that's also in the mainstream media by many people who are naysayers. And of course, you have a lot of people who are still out there, like we said before, this whole Schadenfreude thing where you get off on when something bad happens to somebody and then these same people say, told you so, told you so. I personally don't think that this is like a bubble, or that people are too late in the game, even if they were going to look at this as a method of investment, even at this point. And I do have to do the disclaimer, I think, now. Nothing that Rob and I are saying during this podcast can possibly be construed as investment advice. Please do not take investment advice from myself or Rob. If you want to get investment advice, you must find yourself a professional registered financial advisor. Do a lot of homework, read everything you can get your hands on, do a lot of due diligence, and then sit down and think about it. Do a lot of homework. Never listen to anyone except for your good judgment, a registered financial advisor, and lots of homework. So I'm glad I said that twice. But the whole thing is going on around Bitcoin is that more people, I think, are also not into Bitcoin because it's still looked at in the way that when Uber first came out or Airbnb. Yeah. Because when those were launched, people were like, I mean, I don't know about you, Rob, but I have a lot of friends who are like, I'm never going to get in a car with a stranger. I'm never going to use an Uber. I'm not going to go and stay in someone's house. I'm not going to go in this Airbnb thing. But now people are into that, and people they have to get over this hump. They have to make a lot of informed decisions, and they have to do this in a way that's measured and also helps them. I do think that once, and I want to get your opinion on this for sure, you have, of course, Facebook's Diem, which is coming to light. And I'm not going to talk about CBDCs really, because I've talked about CBDCs in some past podcasts. But Facebook, I think, if it really nails down Diem, is going to make crypto, in air quotes, cool. And that's when I think you're going to see real serious adoption of Bitcoin, fortunately or unfortunately, when Facebook's Diem takes off, or something which is just as community credible also takes a foothold. Because as you know, they're starting to make a lot more strides in the whole Diem space. They started to come out with a lot more in terms of newsworthy press releases and things like this. So what do you think about that? Do you think that Bitcoin will see this incredible phoenix rising even more so from the flames once Facebook brings it even more out to the forefront? Or do you think that Bitcoin's cool enough on its own?
I think it's cool enough on its own. I think that some of the central bank digital currencies, the Diems of the world, these are like private blockchains, right? I think it's going to raise the awareness for what are digital currencies, digital assets. And I think if you look side by side to central bank digital currencies and DM, and then you look at Bitcoin, decentralized. It's run by the people, no central body that's backing it, puts Bitcoin head and shoulders above the rest. And I think Ethereum as well. I mean, Ethereum is, you're seeing a lot more talk about Ethereum being a store of value and really going to give Bitcoin a run for its money in terms of total network value soon, which I'm not convinced that it won't. I don't think it's a 0% chance that it takes over the total network value of Bitcoin just because of the amount of applications that can be built on Ethereum. But I think we are not late. I think that Bitcoin, Ethereum, decentralized networks themselves are going to grow more than we can imagine. And I think that the central bank digital currencies and the DMs of the world, that will help raise awareness and it will drive more people into owning Bitcoin and Ethereum and using those blockchains, because in the end, I believe that decentralization is where we're headed. And I think globally, that's where things are headed. So, the volatility, that's one of the things that, the traditional finance people and governments and all that, they use that to say that these are not fit for people to own, to use, to trade. I think that it is something that if you look on the cover, it's not a great feature. Watching this whole crypto value take 50% off in a matter of days, 60%, that's not a good look. Am I proud of that? No. It makes me feel vulnerable. It makes you feel helpless. And it's one of these things that reminds you that there is no central body that's going to step in like the Federal Reserve does when the S&P or the Dow Jones is getting absolutely smoked and those markets are illiquid. They step in and say, we'll provide all the liquidity to all the hedge funds, to all the banks that we can that's necessary. We don't have that in crypto. So what we're seeing is this, it's almost a throwback to like the 1920s, right? To before all these bank acts and things that were put in place to make sure that markets wouldn't crash again. We're almost seeing this like pure animalistic nature of markets where there's not that, it's like the liquidity provider of last resort, the Fed, these central banks to step in and say, you know what, Bitcoin, you've gone from 58,000 to 30,000 right now. Like, we're going to stop trading for a while. We're going to let people really digest this news, let people take a breath here, and let's let the market makers and everybody recapitalize and get their order books in order on these exchanges. That doesn't happen in crypto. And it's there's something very, very pure about it, but it comes with these very high stress and ugly times. No one seems to complain about it when it's going up every day. But when you see these down moves with that ferocity, it gets very scary. And there is no, in crypto, there's just no lender of last resort like there would be in the normal markets. So it's both scary, it's we're learning a lot. It's still very nascent, right? I mean, you think about 12 years it's been existing, and most of those 12 years have been facing scrutiny from every single traditional financial body on earth. It's not going to die. It's not going anywhere, and it's going to keep clawing back, because I do believe that the fundamental reasons for this to exist and for this to grow, and how dramatically it's grown in value in the short 12 years of its existence, it's extremely meaningful. It's really changing the world, and there's a lot of big money out there that doesn't want that to happen, and they surely don't want it to happen quickly. So like the week we just had was scary for people who own it. It was devastating for people who owned it on leverage. I mean, over 1 million accounts were liquidated completely, and that's terrible to see. But trading on leverage, that comes with its risks. I mean, you're essentially trading with money that's not yours, and you're putting on positions that are multiples of what your collateral represents. So when you get moves like this, then you get liquidated. You get the margin calls, and that's part of the leverage trading game.
How are the regular markets, the regular stock markets right now? How do they look compared to what's going on in crypto?
Well, it depends on who you ask. They're expensive. I mean,
Right.
they are pushing, right? I mean, the Dow Jones, for instance, the Dow 30 in the U.S., what's it trading? About 34,500 right now. Its all-time high was 35,000, kind of 100. So it's literally a couple percent off its all-time highs. In terms of like a price to earnings ratio metric, it's sky high. It's expensive. The NASDAQ, same kind of story. It's within a pitching wedge of all-time highs. It's very, very close. It's 2 to 3% off its all-time highs. Commodity markets, those have gone up dramatically. And that's kind of a function of inflation, of you cannot keep flooding these currency markets with liquidity. And it's not just happening in the USA, right? This is happening in Europe. This is happening in Australia. This is happening in Japan. This is happening in China. This is happening everywhere. Like the amount of just pure money supply out there is growing dramatically. So when you print more dollars, more fiat currencies, it's going to take more of that to buy the same hard assets that we're used to buying. So, is it a surprise that lumber went up as much as it did? Is it a surprise that corn traded its highest price in the last 7 years? Part of that is weather, right? We had La Nina this year, and the South American crop was hurt. And La Nina means there's higher probability for, a below average United States crop because there can tend to be hot and dry circumstances. So, there are other reasons why commodities have gone a lot higher. A lot of it has to do with the supply chain issues, and you just can't get the stuff to places, so prices go up. But it's no surprise that prices have gone up in dollar terms, right? In fiat terms, these commodities, hard assets, real estate is booming. You want to park your dollars or your euro or yen in something that is a harder asset, more scarce, real. So it's not surprising. And the idea of extremely low interest rates, which a lot of the stuff is negative, right? There's negative interest rates on trillions of dollars of debt out there, that what they're doing is they're pushing people out into the more risky instruments. That they're just saying, okay, you could pay us to hold your money or go find something else, right? That's going to have a better chance of making you some return here, some yield. And what that does drives people into anything else. Right? It's still going on. Even this little uptick we've seen in interest rates because they think that the Federal Reserve might have to taper, that these central banks might have to slow down the bond buying, slow down the liquidity that they're putting into the market. So maybe rates are going to go up, and we see a little uptick. But the bottom line is that the overall environment for interest rates is still near zero. It is still extremely low. So people are still incentivized to take risk with their money, not keep it in the bank. And yeah, that's a good thing for Bitcoin, a good thing for Ethereum, a good thing for crypto assets.
I think that the doom and the gloom, it's going to be a temporary thing. I do think we're going to see the recovery. I don't think it will have to do with anything except for the community's true belief in what the potential of everything that we've all believed from the start, how that potential is going to be realizing itself. A lot of these influencers, a lot of these countries, even though China, of course, you can't really ignore that. They are, 70%, although be it less probably now, of the mining is there. But regardless of all that, most of the entry into this space was organic. There was no pressure. It was just a lot of people who could see this as the future. We talked about, very briefly, Facebook's Diem, which, of course, they don't play in the same category, as you correctly pointed out, because Diem is centralized. Of course, Bitcoin's not, and decentralized is the future. The fact that even players like Facebook and Tesla and all these other companies are going into this crypto space, or into the blockchain space, I should say, because you need blockchain in order to have crypto. A lot of people who are going into the blockchain space must believe in it too. So I am totally with you. I think the future's so bright, we're going to wear shades. And I'm not really going to stress out about it. It's just another one of these things where we've got to hold on to our underpants. Maybe that should be, I don't know. What do you think the name of this series should be, Rob?
Oh my God. I mean,
What
it's
slogan?
like buckle up. I mean, that's what I used to say on the floor. That's what we used to say, like, before a crop report. It's like, buckle up because you're about to go on a ride. You know, whatever number's about to come out back when there were the corn, you know, the crop reports, whatever the USDA was about to say is the size of the crop or whatever, buckle up. You know that there's going to be an immediate price change. Like, this market's going to change in a split second, and then it's going to be extremely volatile as everyone tries to digest what this really means. So, I mean, that's pretty much what happens on the daily here. It's wild. This market's going to move, and it's going to move a lot, and it's never closed. And a lot of times when it's moving on the weekends, it's going to be very illiquid, and it's going to be able to move a lot farther than you would think it can because people either aren't trading it or it's just the weekend, right? And we saw that this weekend with a lot of altcoins. A lot of altcoins down 50, 60, 70%, yep. And then you're seeing today a lot of altcoins are up 20, 30, 40, 50%. That's insane. But it's, you know, it's a free market that's open 24/7. And it's that constant liquidity. You can't get that with the banks. You can't get that in traditional finance. So it's really a new paradigm, and it can be absolutely scary at times, and it can be the most exhilarating feeling in the world at other times. And it's just preparing for it mentally is I think, the biggest thing here.
So, everyone, I'd like you to all buckle up. Rob, I want to thank you so much for coming onto Crypto and Blockchain Talk. You're amazing. And whenever you're on here, it's always a good episode. So thank you so much for coming on. You know I'll be harassing you again in the future, don't you?
Oh, thanks. It's always fun. It's great. It's my pleasure. I love joining. It's my pleasure.
Well, on that note, I would like to thank everyone for tuning into this week's Crypto and Blockchain Talk. Please remember to ask your friends and family to download our podcast on one of many, many podcasting platforms. The full list is on our website, cryptoandblockchaintalk.com. But if you just put Crypto and Blockchain Talk into Google, you will see around 70 different platforms and radio stations carrying our podcast. In addition, you can listen to these podcasts 24/7, 365 on our sister radio station, Crypto 24 Radio. That's crypto24radio.com, where again, we play these beautiful podcasts, interviews, and news all around the world for your listening pleasure. In addition, you can contact us through our social media accounts, which are active on Twitter, Facebook, and Instagram. But we love to hear from you directly. That's our preferred method of communication. So please email us at education@savvydigital. That's education@savvy, SAVII digital.com. Thank you again for tuning in. We know that when you tune into us, you have a huge number of choices you can tune into. So when you tune into us, we truly appreciate it. So please be safe, take care, and goodbye for now.